All right, happy Friday and welcome to your market brief for October 17th. This week has been a real battleground. We've got global markets sliding thanks to inflation jitters, and new regulations are coming for the AI sector. But at the very same time, AI infrastructure is looking stronger than ever, and, well, crypto just had one of those weekends. So yeah, let's get into it.
And this right here, this quote just nails it. It really is a tug of war. On one side, you've got policy and all these big economic pressures trying to pull things down. But on the other, you have this incredible engine of AI productivity just pulling in the opposite direction. So we're going to break down this fight.
So first things first, let's survey the damage, because the broader market is absolutely feeling the heat, and right now, you've got to say the bears are in control.
And wow, just look at this. The thing that really jumps out is how consistent it is. It's just a sea of red everywhere you look. Wall Street closed down, the S&P lost over 0.5%, the Dow slipped. Then you hop over to Europe, same story. The FTSE 100 took a pretty big hit, down 1.6%. And Asia? Japan's Nikkei was down too. This is not just a one-off problem in one country, this is a full-blown global downturn.
Okay, so the big question is, what's causing all this? Where's all this pressure coming from? Well, it's basically a squeeze play on the market from two totally different angles. You've got new government rules on one side and good old-fashioned rising inflation on the other.
And here are those two forces, side by side. You've got this new regulation, the GAIN AI Act, which is aimed squarely at the chip sector. And then there's the classic headache for investors, rising inflation. That's what's pushing bond yields up and making it more expensive for, well, pretty much everyone to borrow money.
And that 5%? Let me tell you, that is a huge deal. That's the yield on the U.S. 30-year Treasury. For investors, that's a massive psychological line in the sand. It's basically the market screaming that the era of super cheap money is over, done. And that, of course, puts some serious pressure on what people think stocks are worth.
And if you really want to see how big a deal this is, just look across the pond to the UK. Their borrowing costs are now the highest they've been since 1998. I mean, think about that. That's more than 25 years ago. So no, this isn't just some minor blip on the radar. This is a fundamental shift in the economic landscape, and it's sending shockwaves through markets everywhere.
But okay, that's only one side of this tug of war. Because while the bears are out there growling about inflation, the bulls are still running hard in one very specific, very important sector, AI.
So with all this doom and gloom in the background, you've got to be asking, right? Is there any good news? Is there a silver lining in all this? And the answer is a big, resounding yes. And it takes us right back to the heart of the AI revolution.
I mean, just look at these numbers, seriously. While pretty much the entire market is in the red, the key players in AI are absolutely flying. You've got TSMC, the biggest chipmaker on the planet, posting a 39% jump in profits. That just screams record demand. And then there's Broadcom. Their revenue from AI is up an incredible 63% from last year. This is that productivity side of the rope just yanking back with all its might.
Now, let's circle back to that regulation we talked about earlier. This is it, the GAIN AI Act. And what it does, essentially, is require companies like Nvidia and AMD to make sure their best chips are supplied here in the US first. It's a major policy move for sure. It definitely ramps up the tech rivalry with China. But it also just goes to show how unbelievably critical these chips have become to national interests.
So what's the big takeaway here? It's pretty simple, really. Even with all these headwinds, from regulators, from the economy, the actual fundamental demand for the stuff that builds AI, the advanced chips, the whole infrastructure, it's not just holding steady, it's actually accelerating. This is a massive long-term trend, and it's not going anywhere.
Okay, so while that main battle between policy and productivity is raging in the stock market, a whole different kind of drama is playing out over in the world of crypto.
$20 billion. That is how much value was just gone, wiped from the crypto market in a flash crash. It's a mind-boggling number, and it's one of those brutal reminders of just how unbelievably volatile this space can be. So what exactly went down? Well, Bitcoin took a 13% nosedive down to about 107K, but some of the altcoins like Solana and Cardano, they got hammered even worse, dropping as much as 30%. So what's the cause? Analysts are pointing to a mix of things. Those US-China tech tensions we talked about didn't help, but the big one was a massive wave of liquidations. Basically, too many people made risky, leveraged bets, and they got completely wiped out. It was a classic, brutal crypto shakeout.
All right, so let's pull all these different pieces together and look at what's coming up.
What should we expect next week? Because this tug of war is far from over, and we've got some pretty big events on the calendar. So, what should you be keeping on your radar? Definitely the earnings reports. We've got big ones coming from Tesla, Palantir, and the chip designer ARM. We're also getting new housing data out of the US. And, always a big one, the latest minutes from the Fed's last meeting. Each one of these is going to be another clue about which side is winning this battle.
And that brings us right back to the central question, doesn't it? Which force is going to win this thing? Is it the unstoppable momentum of AI productivity, or is it going to be these powerful headwinds from policy and inflation? The answer to that question is probably going to define how the markets behave for the rest of the year.